There are 3 reasons to buy CVS stock and 1 major reason why you shouldn't. And I've done all the research to bring it to you in this video, and so let's go. Now, the value investing community is very hot on CVS stock, and so I took a look myself, and I do see some interesting points about the security. However, there are things that the value investing community is missing out on. And so in order to dive into this, first, I'm going to give you a quick overview of CVS. Second, I'm going to give you 3 reasons to buy the security and 1 reason why you shouldn't. And finally, third, I'm going to give you my final verdict. So let's start with a quick overview of CVS. Most people think that it's just a pharmacy and retailer, but as you can see here, 1/3 of their operating income actually comes from servicing healthcare benefits plans. And I bet a lot of you didn't know that. I know I didn't until I started looking into this name. And diving a bit further into it, you can see from their 10K that they're actually one of the nation's leading healthcare providers. Their healthcare benefits segment customers include employers groups, individuals, college students, part-time, hourly, and more. Then, of course, comes the segment that we are all aware of, the retail business, which operated more than 9,000 locations and 1,100 minute clinics, as well as an online pharmacy. And finally, there's their pharmacy services segment, which provides a full range of pharmacy benefits management services, which include plan design, offerings, and administration, and a whole bunch of other things. So that also includes a mail order pharmacy. So let's get right into it. I think the first compelling reason behind CVS is the fact that they have a huge moat. You don't fill 1 in 4 prescriptions in the US without having a massive moat. At least that's my opinion on it. And you can see that in 2023, according to Scrape Hero, CVS had 9,509 locations across the US, with 12% of all locations being in California. And I've personally never been anywhere in the US where there wasn't a nearby CVS. And I think there's no debating here that CVS will own a large market share of this growing market going forward. So that moat is strong, and I believe that it's going to remain strong. Now, speaking of the growing market, I think that the second reason why you could own CVS's security is because it has demographics behind it. You can see here that the expected long-term trajectory of the pharma industry in the US is expected to expand at a compounded annual growth rate of 3.67% from 2023 to 2030. And this is because of the rising prevalence of chronic diseases, high utilization of prescription drugs, and increasing elderly population in the US. So you have a strong moat and strong demographics helping the security. I can see why value investors are really hot on this name. And of course, the third reason why you could warrant an investment in CVS is its low valuation. At least that's what the value investing community is saying at first look, but I think you have to peel back a little bit because I think there's a larger story here. So as you can see, as of the time that I was doing the research on the security, the share price was $69.69. Giggity, which reflects a forward PE ratio of 8.1 times earnings, or a juicy 12.3% equity yield. And it's not like analysts are expecting the earnings to decline. In fact, you can see here that earnings are expected to increase to $9.50 a share by 2025, which reflects an even higher 13.6% equity yield. So what's the problem? This looks like a no-brainer. Well, I'm not saying that you shouldn't buy it. That's not what I'm trying to get across here. And in fact, you should always talk to your investment advisor and do your own research. Don't try to take any advice from a YouTuber. So what I'm really saying here is that you got to look at the whole picture, which includes the balance sheet for this particular company. And in this case, you can see that the company does have a whole lot of debt, approximately $36 per share of debt. So as a long-term shareholder of this business, you are also responsible for servicing that debt. Now, some of you guys could say there's a portion of the debt that will never get repaid. It'll continue to roll forward into perpetuity. And so your valuations will be higher. I personally value the company net of the debt, and so my valuation will just be a little bit lower than yours. So the way I look at it, that 13.6% equity yield doesn't look as juicy to me as it did originally. And so let's do some back of the napkin math here and figure out exactly what this means. So if the company is expected to earn $8.60 per share in 2024, and you slap on a multiple of, say, 15 times earnings onto the earnings, it is a $150 per share security. Then subtract the debt of $36 per share to reach the net valuation of $94 per share. So when you compare the current share price of $70 per share relative to the $94 per share valuation of the company, you're basically saying that the company's trading at approximately 75% of its intrinsic value. I would say it's not cheap, nor is it expensive. Now, I'm gonna have to build out a model on CVS to really understand the story and see if it really truly is worth $94 per share or lower or higher. But there's a ton of retailers that are trading lower on the tracker. And in order for you guys to get access to that tracker, you can get access to it at that lower tier of the Patreon. And like I always say, if you don't feel that there's any value for you, you can get a full refund within your first month. So there's absolutely no risk to you guys. So what's my final verdict overall on this security? Well, I think overall it's a great company, and I think it has a reasonable valuation, not cheap, not expensive because of the debt. I've placed it on my wait and see list. I do think that this could come down a little bit more, especially if the market comes down a little bit more. I would love to see this thing under $50 per share. Look, it might not necessarily get there, but I will show you a time recently that it did. You can see that during the 2020 year, it did look like it was going back down to that $50 per share range. And I believe that if there's a larger market pullback, it could get there once again. Only time will tell. Now, I might not be super bullish on CVS stock. However, there is a particular industry that I am really bullish on. And what I found interesting is that Warren Buffett recently took a position in this industry as well. And there's analysts in this industry that are also super bullish on it. And so I actually recently released a video discussing this right here.